Have you ever taken a position in the market and had price come up, take your stop loss, all for then your trade to run and hit take profit? And you're thinking, why? I waited for an hourly point of interest. I'm here. I sold. This is resistance. Why am I losing? This is because you're failing to recognize a liquidity sweep, and you're failing to recognize the pattern of price breaching highs before actually having a true move. So in this video, I'm going to go through liquidity sweeps and show you exactly how to use them, why we use them, and why they're good for trading ES and NASDAQ. Sweet. So liquidity sweeps, what are they? Essentially, a liquidity sweep, in short, is when price comes up above an hourly high or low, takes out resting orders, i.e. stop losses. Now, typically we look for these sweeps of liquidity around session highs and session lows, like London high and London low. As I trade New York session, I'm targeting the previous session high and low for entry and for exits. So that would be London high and London low. So how do they work then? Essentially, a liquidity sweep is the larger institutional players, the market makers, moving price above the hourly highs or lows in order to take out sellers or buyers, make them believe that price is reversing, then they buy or sell in the opposite direction, and then price then comes down on them. So essentially what this does is it grabs a lot of cash. It takes out a lot of orders. People are buying, people are selling, people are already that have been selling or buying and now being taken out of their position, and this is counting towards the grab of cash too. Now, these big institutional players are entering with billions and billions of dollars. They need billions and dollars on the other side to place their positions. So they need to do it in an area where there's lots of volume and lots of liquidity, which are above these highs or lows, because we recognize that, okay, once price comes above a high or low, stop losses get triggered. People then start trading that move as well because they believe that, okay, now we're breaking out. In turn, a lot of liquidity is available and we are now at an optimal entry for these bigger institutional players. Liquidity sweep is the first confirmation that I use in my trading strategy to tell me that, okay, price now may start to reverse. So why do we use liquidity sweeps then? These can provide us with direction in the market. They can actually let us know whether a retracement is starting to happen, which is, of course, what we need to know. So when we can spot a reversal happening, this is when we can start to trade it. A liquidity sweep is the first confirmation of a reversal because price has now taken out all of the resting orders, resting liquidity, and is beginning to move down. After the liquidity sweep happens, it means there's enough cash in the market, enough cash in that move to hit lower levels, i.e. the next target on liquidity, which would be London low if you're aiming in from London high. And sometimes you can catch a nice trade between them levels. Now, when you integrate your liquidity sweep with other confluences, which is, of course, a strategy, it becomes a lot more powerful. You can't just trade off of a liquidity sweep, but you can use that as a confirmation towards, okay, price now may start to reverse. What else can we align up with it? You can then look for 1 minute fair value gap taps and then a break of structure in your direction, possibly line it up with Fibonacci levels, see what's going on. I've got multiple videos on my channel showing you exactly my trading strategy, so if you want to have a look at them, you can do so. So when implementing liquidity sweeps, like I just mentioned, you're going to want to be using them strategically. You don't just want to be like, okay, right, sweet, price has swept liquidity, let's sell or let's buy. I mean, that doesn't make any sense. So you want to be strategically looking for your sweeps. Don't just be looking at any sweep of every single hour. Look for swing highs at least, swing lows, hourly highs, hourly lows, 4 hour highs, 4 hour lows, dailies as well. You can combine your sweeps with the 1 minute fair value gaps, order blocks, breaker blocks to observe market structure and observe an entry on a position. You can align all of that with Fibonacci levels as well on the 1 minute. After you have a liquidity sweep, you can draw your Fibonacci from the recent swing high and swing low on the 1 minute, bomb out, get yourself a nice little optimal entry, line that up with a fair value gap, put your entry in there, stop loss above, do your thing, you understand? But yeah, so I'm going to show you on the charts now exactly how to look for a liquidity sweep in an ideal situation. Right, when you're looking at a sweep, you want to see a sweep of hourly highs and hourly lows, okay? If you got your sweep right, the hourly candle that you're trading will leave what I like to call the John Wick, bro. It's just a savage wick on the hourly that takes out all of the previous draws on liquidity, and then we have enough money in the move to come down to these significant levels at the bottom here. So first thing that we do, mark out our session openings, which we got London Open, New York Open, and this is the macro session here at 9:30. Now mark out London highs and London lows. These are our first draws on liquidity. Yeah. We also need to get a daily bias. First of all, boom, boom, I'm looking for sells. So we want a sweep of highs. The reason why I'm looking for sells is because there's a big fat weekly opening gap here, and I'm looking for price to come and actually fill this bitch. So yeah. Other than that, we want price to take out London highs, and I don't know if you can spot back here, but there's also a nice area on the chart here which we call buy side liquidity. You can mark it up as BSL, and these are 4 hour and 1 hour highs here. This is also the start of the week, Sunday. So we've got our point of interest now. We've got our draws on liquidity. We've got London highs as buy side liquidity, and these 4 hour highs from Sunday as buy side liquidity. Yeah, we need now price to sweep these highs. We need price to come up and then break structure below, confirming the sweep, and then we can look for a position on a retracement to a fair value gap, and then possibly sell coming, oh Jesus, and then possibly sell all the way to the London low. Lovely stuff. So alright, cool, but we're not going through strategy today, we're just going through the sweep. This is how easy it is, okay? So you need to mark up your session times. Get your session times right. You got London Open here, New York Open. Now we've got London low and London high. We're bearish, we're looking for a sweep of highs. Boom. If we're bearish, we want a sweep of highs to sell. If we're bullish, we want a sweep of lows to buy. Kushti. So I observe my sweep on the 5 minute. Okay? You want the 5 minute chart to come up above the highs. Let's make this one a little bit bigger so you can see it. So we got the other high here and this high here. We want price to come up above it, break structure on the 5 minute in our direction, and then we've got our sweep confirmed. Okay, so we can play it out on the chart. Let's observe price. Okay, so right, that was too quick, but that's where our sweep gets confirmed right there. Okay, so price comes up above the highs here, above the highs. Cool. We don't get a confirmation of a sweep until we get a break of structure. Okay, so as you can see, this 5 minute held this 5 minute low, so there was no break there, but the second 5 minute candle broke structure here. Okay, cool. Now the liquidity sweep is confirmed. Now you can get out Fibonacci levels, you can draw from swing high to the swing low, you can start to play out the strategy, you can start to observe possibly getting into a trade around the 1 minute. Yeah, you got fair value gaps here, you got order blocks everywhere. You know, there's many entry points here, so I would line it up from anywhere between this level and this level inside the Fibonacci golden zone. Kushti, target lows, boom, that's a fat juicy trade right there, and you're in for it. But the sweep, let's do it again, I'll show you. It's so easy. It's just, what the fuck is that? It's so easy. You just got to make sure that you're getting the 5 minute. The 5 minute is the confirmation of it. Okay, at this point price hasn't swept highs, price has just come above it, right? Could be breaking right now, you know what I'm saying? Price needs to sweep highs. Once price has broken structure on the 5 minute, that's when we have a sweep of highs. At this point price has not swept highs, has not because we have not broken that low. Okay, so this point price has broken the 5 minute low, and now we have swept highs. Okay, now you can start to look for your next confirmations for a trade. Cool. That's as easy as that, boys. Literally. That is how you observe a liquidity sweep. Okay, now we can say price has swept London highs and it has swept all these previous highs here. And I'll show you the John Wick. Here he is, the John Wick candle right there. Boom, bow. That's it. London low, take profit. Let's see what we got. Straight to London lows. So any of your entries around here would have been completely safe. Doesn't matter what you would have been on, you would have hit take profit, no stress. But that is the wick on the hourly. This is the sweep. It's even swept a bit of that. I didn't manage to sweep these, but took out some of these highs. But the major ones were this high here, this 4 hour and 1 hour high, and London high. And that is it. That is how we observe a liquidity sweep in the markets. Easy stuff, boys. Right, now if you want to learn a strategy behind this, I've got multiple videos on my channel on how you can use a liquidity sweep alongside the other confluences to actually gain positions in the market. But other than that, I hope you enjoyed the video, boys. So